This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European gas prices hit a new record high on Tuesday after a pipeline that brings Russian gas to Germany switched to flow east, a move the Kremlin said had no political backdrop, while two big German customers said Gazprom was meeting supply obligations. Westward gas flows through the Yamal Europe pipeline, one of the major routes for Russian gas to Europe, had been falling since Saturday and, after stopping early on Tuesday, reversed direction, data from network operator Gascade showed. Some Western politicians and industry experts have accused Russia of withholding gas deliveries to Europe amid political tensions over Ukraine, as well as delays in the certification of another pipeline, Nord Stream 2.
OPEC Plus compliance with oil production cuts rose to 117% in November from 116% a month earlier, two sources from the group told Reuters, indicating production levels remain well below agreed targets. Compliance from the 10 OPEC countries participating in the production cuts reached 122%, with participating non-OPEC countries achieving 107%, data seen by Reuters showed. The International Energy Agency, IEA, said in its December oil market report that OPEC Plus missed its production targets by 650,000 barrels per day, BPD, last month, compared with 730,000 barrels of oil per day in October.
Moving on to the top news in the energy sector.
The Environmental Protection Agency, EPA, on Monday finalized new vehicle emissions requirements through 2026 that reverse former President Donald Trump's rollback of car pollution cuts and will speed a U.S. shift to more electric vehicles. EPA Administrator Michael Regan called the tough standards doable, even as he vowed to quickly move ahead with the next round of requirements. We are setting robust and rigorous standards that will aggressively reduce the pollution that is harming people and our planet, Regan said. In August, President Joe Biden's administration proposed undoing the Trump-era action easing requirements imposed during the presidency of Barack Obama. The new rule finalized Monday is tougher than EPA's August proposal or requirements issued by Obama.
Indian refiners' crude throughput in November was the highest since February 2020, government data showed on Tuesday, as hopes of a steady uptick in demand at the world's third biggest oil consumer prompted refiners to operate at full capacity. Refiners processed 5.25 million barrels per day last month, up 5.9% from 4.96 million barrels of oil per day in October, the data showed. On a year-on-year basis, throughput rose about 3.4%. Refiners normally look at demand potential in the next few months and they still appear to be very optimistic about India's oil demand despite a recent dip, said Refinitiv analyst Ahsan Ul-Haq. Next, we have the top news in metal markets. Indonesia's 2022 coal output is estimated at between 637 million to 664 million tons based on production plans currently being finalized, said Sunindio Suryo Erdadi, a director at the Energy and Mineral Resources Ministry. The figure compared to an output target of 625 million tons this year. The domestic needs for coal next year was estimated at 190 million tons, Sunindio said.
Gold prices firmed on Tuesday as a dip in the US dollar and risks posed to global economic growth from a surge in the Omicron variant cases burnished the metal's safe haven appeal. Spot gold was up 0.4% at $1,796.10 per ounce, as of 12:43 GMT, and U.S. gold futures edged up 0.1% to $1,796.80. While a lower U.S. dollar has helped gold, markets are still reluctant to send spot prices significantly higher, knowing that Treasury yields could yet surge with U.S. Federal Reserve rate hikes looming next year, said Han Tan, chief market analyst at Exinity.
We will now look at the top news in the agricultural sector.
India on Monday slashed the basic import tax on refined palm oil to 12.5% from 17.5% earlier, the government said in a notification, as the world's biggest vegetable oil buyer tries to cool near record price rises. The tax cuts would make refined palm oil more attractive for Indian buyers than crude palm oil and boost shipments of refined grades from Malaysia and Indonesia, traders said. After the cut, refined palm oil imports will be subject to a 13.75% tax in total, including Agriculture Infrastructure and Development cess, AIDC, and other taxes, down from 19.25% earlier, traders said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.